Today's video is going to be about dividend investing and specifically about how we can take $500 and get you started with a great portfolio. It's a rainy, cold afternoon here, so hopefully you guys are staying warm and dry wherever you are. But yeah, dividend investing, it's a great way to get started in the world of finance. Just kind of to clarify, I am not a professional advisor. This is not supposed to be taken as investment advice. I cannot legally tell you what to buy. This is for entertainment and discussion purposes. This is my personal opinion, but this is not, my word isn't gold. Make sure you're doing your research, you're looking at, different sources. But yeah, let's talk about dividend investing. So dividend investing is very different from what we have seen with GameStop and AMC. That kind of like buy low, sell high, high risk stuff. That's not a stable way to get started. You can get to that point eventually. What we've seen with GameStop in particular has been just absolutely wild. That is not normal. So that high risk trading, it can be fun. It can be rewarding. You can be successful, but you can also make a lot of mistakes. I've lost a lot of money with high risk investments. We'll get to that point eventually, but you're just getting started. I personally believe that something like this is going to be the best way to get your feet in the water. No one benches 500 pounds the first time they go to the gym. So before you can be the wolf of Wall Street, you're the little pup, you're the little wolf pup. So that's the point of this video, is just getting you started with $500. What really gives dividend investing so much value and why I think it's such a good way to get started is because you've got your $500 here. You're not spending that when you put it into a company. You are investing that money. The idea is that you are going to hold shares within companies for 5, 10, 15 years. If the stock goes up 15, $20, you're not selling, you're holding, because you're holding that investment for a long term. The goal is that not only have you put this initial investment in right here, but you're also getting dividends. Whereas let's say you just put it in a bank account. You put $500 in the bank and you just leave it there, that money is going to get devalued due to inflation. It's not going to do anything for you. This makes your money work for you. This gives you the opportunity to not only safeguard your money against inflation, but it also gives you the opportunity to make money off of your money. You're not buying it and holding until it just goes up, 20 or $30 and then you're selling it off. No, you're holding this for the long term and hopefully not only getting profit from your dividends, but actually making more money than you initially put into it. If you hold on to the shares and you pick the right shares, over 10, 15 years, you could make back more than you initially put in. Plus, you've still got this. You've still got your original money that you put in that then when you sell, you get back. So this is how you grow your wealth over a long-term period of time. There are two things that we need to remember when we're doing dividend investing that are very important. The first is the dividend yield, and the second is dividend safety. So the dividend yield is a ratio that we use in finance to calculate how much money we can expect to get back from an investment. And that's what I wrote on the board right here. So can't really see it that well, but it says annual dividend per share divided by the current share price. So that is the equation that we're going to do. I wrote up here, let's say I've got this company I'm going to invest in, right? So I'm going to buy 100 shares at $100. So that's going to be $10,000 that I'm putting into the company. They had an $8 dividend. So the annual dividend per share is $8 divided by the current share price. We're going to get an 8% dividend yield. We have our 8% up here. That means that over the course of a year, since I put $10,000 into the company, I'm going to get $800 a year in dividends, assuming all the numbers stay the same. So over the course of 10 years, if I hold it for 10 years, that's $8,000. Plus, I still have my initial $10,000 investment into the company. So in 10 years, I have turned $10,000 into $18,000. Versus just letting that money sit in a bank account or putting it into risky investments I'm not ready for and then likely losing a lot of that money. So this is why dividend investing can be such a powerful investment tool. You need to be careful though. Stocks are not guaranteed to stay stable in a price, and if a stock is turbulent but has a high yield ratio, it may be at risk of reduction in the future, just so that that company doesn't go under. So this is where dividend safety comes into play. Spend a little time, looking into the history of a company's dividends before you buy it. Also look at the stability of the stock over time. A few Google searches won't take you long, and they will be a smart money move. Taking a couple minutes to look at this stuff can save you a lot of money and a lot of grief when it comes to preventing mistakes. The thing you want to be aware of is if the company you are putting your money into is a REIT, R-E-I-T. REIT stands for Real Estate Investment Fund. And REITs are a little different than traditional companies. There are three different types of REITs. So there is an equity REIT, so they tend to own large shopping centers, office buildings, industrial properties, and they have big companies that will then pay them money for that. So for instance, your local shopping mall with the Target and the Whole Foods, that's probably owned by an equity REIT. Then there's mortgage REITs. So mortgage REITs, they invest in mortgages and mortgage-backed securities. So these are going to be the most kind of risky of the REITs. And then there are hybrid REITs, and hybrid REITs, they do both. Now, another thing that you can consider are ETFs. These stand for Exchange Traded Funds. So ETFs are a collection of securities, and this can be a good option because they're oftentimes quite diversified over a variety of industries, so that can really help mediate risk. Other ETFs are specifically going to be oriented around industries. There are ETFs that specifically deal with green energy. There are also ETFs that specifically deal with oil. So just do some research, look into them. Again, it's a lot like the REITs. You don't have to get ETFs, but you don't have to avoid them either. Just do your research and do what's going to work best for you. So now let's go ahead and talk about the $500 beginner portfolio. So this is not going to make you, $8,000 like in the example that I gave. But this is a first start. This can help you get comfortable with a handful of companies, help you get comfortable with some industries, and it still puts your money to work for you as opposed to having it just be devalued. I am going to go ahead and cover a couple companies that I think would be good options for a first-time portfolio. I'm not saying to buy them. I'm not a financial advisor. You need to do your own research based off of your own financial goals, your own limitations. This is a hypothetical portfolio. Also, all of these numbers were collected over the course of February 7th through February the 11th. So, these may fluctuate over the course of a year or a couple years. I would be shocked if they didn't fluctuate just a little bit. So just keep that in mind. These numbers are not necessarily going to be the same when you're watching this video, whenever you're watching it. So the first company I want to talk about is Enbridge. So I have holdings with Enbridge and I like them a lot. They are a natural gas distribution company. They're based in Alberta, Canada. They have a dividend yield of 7.41%. And if we were to take $125 from our $500 and put that into Enbridge, we would be able to get 3.55 shares for that $125, because right now they're $35.17 per share. So I'm going to go ahead and put that on the board. With our $125, we're getting 3.55 shares. Their dividend yield is 7.41%. So over the course of a year, we're going to get $9.25 in returns just in dividends. So we still have our $125 that we put in the company, but then we've also made $9.25. The company I want to talk about is AT&T. AT&T has an outstanding history of reliable dividends. So they are currently trading at $28.60 per share. So with our next division here, another $125, we're going to get 4.37 shares with that money. Their dividend yield is 2.27, which means that over the course of a year, we're going to get $9.09 in dividends. Another quick note, some companies pay dividends every month, some pay them every quarter, some pay them every year. To keep things simple, I'm just going with the year-end dividends, just to make it easier on everyone. So the third company I'm going to talk to you guys about is Orchid Island Capital. So Orchid Island Capital is a REIT that specifically deals with mortgage-backed securities. So I have two things I want to note about them before we get into their numbers. So the first thing to note is that any money made from positions with them is going to be taxed as income, not as capital gains. So just be aware of that. The second thing to note is that because they deal exclusively with mortgage-backed securities, they are going to be a little bit riskier of an investment. I personally wouldn't say that they are super risky. I wouldn't put them in GameStop territory, but because they are dependent upon how the housing market is going, this is going to be a little bit more turbulent. So that's why I always say do what works for you. This is a company that I'm invested in. That doesn't mean that you need to invest in it. I just think it's a good example. So their shares trade at $5.51 per share. So with $125, we're going to be getting 22.68 shares, and their dividend yield is fantastic. It's 14.31%. That's why I hold them. It's got a great yield. It's a little riskier, but for me, I can take that risk. My risk tolerance is such that this is fine. It might not be for you, it is for me. So yearly, with $125 invested, 22.68 shares, we're going to get $17.88 in dividends. Our last $125 is going to go into American British Tobacco. They're a holding company. They own brands like Dunhill and Lucky Strike. Their shares are $37.24, so we're able to get 8.35 shares. Their dividend yield is 2.27, so per year we're going to get $9.07 in dividends. So taking a step back, we've got our initial $500 investment, and now we've got $45.29 that we've made in dividends. This hasn't been spent either. This has been invested. This may fluctuate a little bit in value as the market goes up and down, but you still have your money in something. It's not just gone. You can always sell your positions if you need that money back. But now we're also getting dividends. This is way better than anything that the bank is going to do for you, just letting your money sit there and get devalued due to inflation. This is how you can start making your money work for you. This is how you can start taking control of your future finances. Is $45 a year going to make you rich? No. But if you can get an initial investment going and you can continue putting time and money into it, your wealth has the opportunity to grow, especially if you hold your shares for 5, 10, 15 or more years. There's a few final points I really want to make sure that I hit before you guys leave. So first, I want to be clear. These numbers are not set in stone. Stocks move up and down, dividend yields can rise, and they can fall. This all depends on the health of the companies and the economy, so remember to do your research. I also wanted to go ahead and answer a question that I'm sure a lot of you guys are wondering. Why did I mix up the companies? Why not dump everything into Orchid Island since they have such a high dividend yield? So that's a really good question. The reason is because diversification is a safeguard of your money. If I put all my money into Orchid and we have a housing crisis and they go under, I could lose everything, especially if they had to declare bankruptcy. So remember, diversify. And do not invest more than you can afford to lose. You don't invest your rent money. You do not invest money for medical bills. You invest money that you can't afford to lose because you will lose. I've made a lot of money with stocks and I've lost a lot of money with stocks. So just remember, this is not get rich quick. The stuff with GameStop might make it seem that way, but long-term financial success is a long-term thing. It takes time. You cannot just do this and get rich quick. That's not real. That's not how this stuff works. So I don't want to see any of you guys get hurt. If you see someone claiming you can just buy this one company and you'll be rich, or they are lying to you. You need to be wise and prudent and do your research. Don't even take what I say as gold. Do your research on the things that I tell you because I could be wrong. So just keep that in mind going forward. Thank you guys so much for watching. And remember, I'm not a financial advisor, so this is no way, am I trying to tell you that you should buy these securities. This is just an example portfolio of how you can get started, not necessarily how it should be to get started. Thank you guys so much for watching. And remember, I'm not a financial advisor, and I am in no way saying that these are the securities you should buy. They are options, they're things that you can consider. There are ways that it can be done, not necessarily ways that it should be done. So evaluate your resources, evaluate your risk tolerance, what your goals are, and ultimately do what works for you guys. If you would like to go ahead and support the channel, I have my link in. If you want to help support the channel, I do not have a Patreon because you don't get anything out of a Patreon. I do have a Redbubble though. I've got laptop stickers, t-shirts, a bunch of other stuff. So if you do want to support the channel, you can do it through there. That way you're at least getting something back in return. I'm hoping to get a microphone and an HD camera so that I can kind of up the quality of these videos for you guys. But really, thanks for watching. Remember, good vibes only, and have a great day.